Good day everyone, welcome to Accounting Expo. This is Abisola Abeke, your financial accounting teacher. Today, I shall be introducing an important concept of financial and bookkeeping, which is business transaction and accounts receivable and accounts payable, with the help of a story that happened on the 1st of August 2024 between Ade, the shopkeeper of Bezali grocery stores, and Juliana, a senior secondary student. Juliana wanted to go to school on time and she needed bread. And Bezali grocery stores happened to be the 10th shop for that day. And luckily for her, she was able to get the bread at 1,000 naira during a season in Nigeria when the prices of flour rose up and other ingredients for baking bread and other snacks rose up. And luckily for her, she was able to get the bread for 1,000 naira, and she bought the bread by giving out 1,000 naira to Ade, the shopkeeper, and collecting bread in return. So this brings us to an important concept in financial accounting. I remember that in our last video, I told you that bookkeeping and accounting is the act of recording business transaction. So what is this business transaction? Business transaction is a financial event that takes place between at least two parties who exchange value, items, in return for money or money's worth. Looking at the activity that took place between Juliana and Ade is called a business transaction. Why is it a business transaction? It's a business transaction because Juliana, who needed to buy bread, exchanged 1,000 naira, gave out 1,000 naira in place of the bread. So initially, before getting to the shop, she was the owner of the 1,000 naira, and the bread belonged to Bezali grocery stores. But the moment she bought the bread, the 1,000 naira automatically became that of Bezali grocery stores, and she became the owner of that bread. So now there are two types of transaction. We have cash transaction and credit transaction. What is cash transaction? Cash transaction is the event, is the transaction, the financial transaction between at least two parties who exchange goods for immediate payments. Looking at the activity that took place between Bezali, Ade, and Juliana, instant payment of 1,000 naira was made. So we can call that one a cash transaction. But does that mean that whenever there is no exchange of money, transaction has not taken place? That takes us to what is known as credit transaction. So what is credit transaction? Credit transactions are financial events or transactions between at least two people who exchange value, but the exchange is not backed up by an immediate payment, meaning that payment will be made at a later future date. For instance, assuming Juliana bought the bread and there was a mutual agreement between Ade, the shopkeeper, and Juliana that payments, that the bread that was bought on the 1st of August, that the payment for it will be made on the 30th of August 2024. That's a credit transaction because it was not done based on charitable purposes. And I would like to inform you that any event that does not involve, that is not attached to exchange of monetary value in place of the transfer is not a business transaction in financial accounting. Is not in accounting, is not reckoned with. transaction must be backed up by either an immediate payment in case of cash transaction or payments to be made at a determinable future date, a deferred future date. And that takes us to the next episode, the next topic, which is accounts receivable and accounts payable. Accounts receivable used to be debtors, but because debtor is a person, is not an asset, it's been changed to account receivable. So what is account receivable? For instance, assuming Juliana bought bread for 1,000 naira and did not pay money, she bought bread on the 1st of August, and payment of 1,000 naira will be made on the 30th of August. The 1,000 naira is the account receivable because it is what is due to be collected from her. So what is account receivable? Account receivable is the money or money's worth that the customers are owing the organization as a result of credit sales, that is, as a result of the goods sold to the customers on credit. In the illustration that I gave earlier on, the account receivable is the 1,000 naira worth of bread that was sold to Juliana on credit basis. So the 1,000 naira is the account receivable. So meaning Juliana is owing Bezali grocery stores 1,000 naira. So it's an amount due for collection from Juliana. So it is an asset to Bezali grocery stores. But the debtor in that case is Juliana, the person, the actual person that bought goods on credit from Bezali grocery stores. But because of the fact that in account, we reckon everything, every transaction must be expressed monetarily. Emphasis will be based on the amount of money that is being owed. Now, accounts payable. Accounts payable is the amount that the organization is due to pay to their creditors. For instance, assuming Bezali grocery stores bought flour worth 20,000 naira from their suppliers on credit basis, the accounts payable, that is the amount they are expected to pay to their suppliers, is 20,000 naira. So the account payable in this case is the 20,000 naira they are expected to pay to the suppliers, but the creditor is the person they bought the goods from. So is the person they are indebted to. So accounts receivable in the balance sheet is treated as an asset, while accounts payable in the balance sheet is treated as a liability, because in the case of account receivable, the debtor is owing the organization, but in the case of accounts payable, the organization is indebted to their creditors. So thank you for watching this video up to this moment. If you have any question concerning the meaning of business transaction and accounts receivable and accounts payable, please comment, write your question in the comment section below. Thank you for your time and God bless you. Have a great day. Bye for now.